And you guys thought that Mark Zuckerberg had it all good. He's doing jujitsu. He's challenging Elon Musk. His stock's going up like crazy. They're trying to cure the world of cancer. And then just like a ton of bricks, boom, reality happens. Let's talk about Meta. Meta stock, oh boy, and how as investors we can take advantage of it. Before we get started, as always though, like, subscribe, and share our channel as we continue to grow. The more we comment, the more we like, the more we subscribe, the more we can help people. You know, as a certified financial planner, over 15 years of experience, I brought in over $250 million in assets. I'm doing something right. But on these YouTube streets, I'm just giving information in a comical way, making some painful profits. But let's go.
First quarter came out comfortably above estimates. The second quarter, though, maybe not as much. So first quarter revenue at $36.46 billion is indeed above what analysts had been anticipating.
Over $36 billion in 3 months? Man, you want to talk about getting to the bag. 36 with a B, not with the M, with the B. Woo.
Earnings per share at well $4.71 versus the $4.30 that analysts had been anticipating. But if you look at the second quarter revenue forecast, 36.5 to 39 billion. The midpoint of that looks to be below about $38.25 billion that analysts had been anticipating. So
you telling me we made over $35 billion and we missed your estimations on Wall Street by $500 million? A lot of money. And that's going to make the stock go down by almost 10% after we release earnings. Woo.
The quick reaction here is that the shares have fallen. But to your point, Josh, Schaefer, that is, this is a stock that's up 39% year to date. And so how much is priced in already is a great question.
39. Think about that, y'all. Facebook is up by 39% this year. A year and a half ago, it was like the death of Facebook, right? Zuckerberg was doing the wrong thing. What is he doing? People wrote off Facebook. And we look up today, it's one of the highest performing stocks in the past year and a half. Time flies, we having fun, and we forget things when it doesn't go our way.
I'm just looking at the statement here. Mark Zuckerberg says it's been a good start to the year. He's pointing out new version of Meta AI with Llama 3. He says another step toward building the world's leading AI. We're seeing healthy growth across our apps, he says, and we continue making steady progress building the metaverse as well. So it doesn't seem like anything fundamentally is changing the strategy at Meta. First glance here, it seems like folks are focusing on that second quarter forecast. I'm going to keep digging in here. Yeah.
We're talking about practice, not a game. We're not even talking about how much they're actually going to make or made. We're talking about what they think they're going to make. So just the assumption that their revenue is going to slow down from the first quarter to second quarter makes their stock go down by 10%, now down by 15%. Jiminy Christmas. But this is a bigger deal from a holistic standpoint. Jay Powell and the Fed not lowering rates. TMF, my baby, went down by almost 15%. May not lower rates until the end of this year or in early 2025. And if we have a new administration, who knows if that's going to happen? Or if it might be quicker, as a new administration might want to fuzz the numbers and have the stock market continue to run up if it's not running up in 2024, in late 24. Also, when that happens, the market stagnates. And right now, stagnation is happening. The market over the past 3 weeks, really 4.5 weeks, have went down. And so Jay Powell might be happy. And he might be happy because he might not have to lower rates. He might not have to raise rates. But they want to lower rates. And by the economy slowing down, we're not even including the inflation numbers, that gets the case for him to lower rates. And my friends, Meta might be the catalyst of why things might get worse. Just thinking, forecasting things are going to work. That means they know something we don't know, right? They spend so much time on advertising. They spend so much time analytically. They know people are spending money on it. They're on Facebook ads. People are doing less Facebook ads, right? If those Instagram ads aren't being generated and bought like it was 3, 4 months ago, seeing a slowdown. So they're estimating already things are going to slow down. And what Meta does sometimes follows the market. Now, for the year, as we can see, Meta like crazy. Look at this big old bounce. You want to talk about a gap up. A gap up of 22% in one day, and that's it kept climbing, right? But as you can see, just like the market, it's been going down since this month, right? Down by 10%. This does not include it being down by 15% today. So really, Facebook is down tomorrow when the market opens by 25% off its high. Pretty good discount. But the market in its totality, though, that's what we want to look to and look at SPY, right? As we can see, great build up. It was by almost 13%. Great build up. Look at that. That's what we want to see, right? Great build up. Up almost 12%. Lost half of it. Down 5%, right? Now, definitely made some back over the past few days. Definitely rebounded from the past 4 weeks. However, today, down. When the market opens up, I would imagine it's going to be down as well. Might be testing this. And if we break from a SPY standpoint under $494, my profiteers, things might get a little bit out of control, right? Because the next low, oh my gosh, 486. Ugh, 486. Where we at 486? From where we at today down to 486, my profiteers, that is another almost 4% loss. And I would imagine we're going to be testing this resistance here. It's going to be our support here at 477. And 477 from today, that is another 5%. So that means the market would literally be back to where it was January 19th. So I think the market's going to open up down because of Facebook being a catalyst. If it breaks the point where it was last week at 484, probably down to 478, which means all the gains that we had for the year will be erased. Now, what will happen, we don't know, but Meta is a catalyst. So there you go, my profiteers. Nobody knows God the future. I do think, though, when the market closes, we're going to have some people that's, what's going to happen if it's continue to be a downturn, to break low 484, probably getting close to 470. And if it happens, then all the gains we had for the year washed away. And that's when Washington administration says, hey, pal, things are getting worse like you want it to be. Now let's go ahead and start lowering rates. Cook the books. So the second part of the year, the market will go up, we can get elected. That's just my thoughts. Who knows? I might be wrong. One thing though, 10 years of action, we're going over $250 million. Something, just a little bit. But anyways, comment below. What you guys think? Is a good idea or a bad idea to lower rates? And with Facebook, good time to buy, bad time to buy. Love like always. Comment below. Let us know what you think. Peace.
Making no money mistakes. Make a payment on your bills and you still late. Yeah, painful profits to help you seek change. And you just wanna get paid. Yeah, tired of making no money mistakes. Make a payment on your bills and you still late. Painful profits to help you seek change. Yeah, cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you knowing it could be different. You knowing.